Hey there, folks. This is Diksha Janyani from Trendline, and this week we discuss how the recent uh, rate hikes made by the Reserve Bank of India impact the home buyers as well as the real estate companies. So, the Reserve Bank of India's Monetary Policy Committee or MPC hiked the repo rates by 90 basis points to 4.9% so as to tame the consumer price inflation, which had crossed the 7.5% levels back in May 2022 before cooling off to 7.04% levels in June 2022. And if you notice, HDFC Bank's marginal lending rate has also risen in tandem with these repo rate hikes in the past 2 months. So these rate hikes are bound to affect your home loan EMIs as well. So let's find out what will be the impact on your EMI and the total interest outflow. So say suppose you bought a 3 BHK flat in Prestige City in Bangalore back in June 2021 and you approached ICICI Bank for a loan. The bank granted you a loan of 50 lakh for a tenure of 20 years at the rate of 7% floating interest rate. Even though it is floating interest rate, for calculation purposes, let us assume that you continue to pay 7% interest rate for the next 20 years. So your total interest outgo comes out to be rupees 43 lakh. And now that the repo rates have increased, your home loan interest rate have also increased to 7.9%. And now if these rates apply for the next 19 years, your total interest outgo will be around 49 lakhs. So straight away you have to pay an additional interest of 6 lakh over the tenure of your loan. Now there is an increased possibility that the RBI's MPC will hike rates by a further 50 basis points. So your home loan rate in 1 year from now will be around 8.4%. So assuming this new rate, your total interest outgo will increase by 3 lakhs. So three successive interest rate hikes and you will be out of approximately 9 lakh in the tenure of your loan. So that's right. And of course your EMI also increases with these rate hikes. So moving on, let's analyze how much of an increase in repo rates and home loan rates will materially impact the housing demand as well. So see, RBI has increased the repo rates to 4.9%. These rates used to be around 8% levels in 2015. Yes, that is right. However, having said this, the market leader, that is DLF, believes that if home loan interest rates rise beyond 8.5% from current range of 7.5 to 7.9%, then it can definitely impact the demand. So while the current quantum of interest rate hikes, which is 90 basis points, will impact the demand, will not leave a substantial impact on the demand, but investors need to watch out for any further interest rate hikes. That is true. And while the real estate will be impacted, the building material segment will also be impacted because of the connection between these two. See, when you build a house or a flat, you use cement, you use plywood, ceramic tiles, PVC pipes, paint, steel. So any slowdown in the housing demand trickles down to the players operating in these sectors also. And now you have cement majors like Ultratech Cement planning to incur a new capex of over 12,000 crores. Then you have the number two player, which is ACC and Ambuja, now acquired by Adani Group, planning to double its capacity in the next 5 years in such a scenario. So that's the theory for you. Now, moving on, let's go back a little bit in time, folks, to understand the correlation between interest rates and the real estate sector in a better manner. So, see, back in early 2019, the Monetary Policy Committee had started to slash the interest rates, and this is when the current RBI governor, who is Shanti Kanta Das, had come to helm of affairs. So, between January 2019 and June 2020, the RBI had successively slashed interest rates because the consumer inflation was low and they wanted to boost the economic growth. And again, in March 2020, COVID 19 hit India and the world. So MPC kept the interest repo rate at 4% levels between June 2020 and April 2022 um, to basically so that the economy can recover in a better manner. So that's one thing too. But however, there was one major beneficiary of these rate cuts, which was the real estate sector. So another trend emerged during this time, which also worked in the favor of the real estate sector, which is the remote work culture. So remote work culture, which persisted for 2 years during the pandemic, boosted the housing demand across tier 1 and tier 2 cities. So all in all, while FY21 was a good year for real estate, FY22 was a blockbuster year for real estate because they saw a massive rise in their sales booking. You have companies like Prestige Estates and DLF, which saw their pre-sales double in FY22. That is right. So, see what is and see for Prestige Estates, the pre-sales were driven by its projects in Sarjapur, Bangalore, and its Hyderabad project. So, pre-sales or sales booking is basically when you sell a home unit to a buyer before its actual completion. That is a key thing to note here. So moving on, see these pre-sales, the rise in pre-sales was majorly driven by volumes, and the price rise contribution was relatively less. Basically, the real estate players cleared their inventory of completed homes in the last 2 years. Yes, that is right, and the reliance on new launches was relatively less. So this is also evidenced by the fact that the unsold residential inventory overhang across top 7 cities in India reduced to 33 months at the end of 2021 from 55 months a year earlier. So unsold housing inventory overhang is basically the time that you require to sell the current housing stock in a particular region. So that's also one important point. And Q4 FY22 was also very encouraging for these players. So basically players, you have players like DLF and Prestige Estate, we saw a good jump in sales bookings. And for a player like Macrotech Developers, Mumbai drove its pre-sales growth, and for DLF, its core market of Delhi NCR drove its pre-sales growth. That is right. So, see, the cut in interest rate not only boosted the housing demand, but also reduced the cost of debt for real estate players. So, see, real estate sector is a very capital intensive sector because it involves residential construction. So that is why companies take on debt for the same. So we can see Macrotech Developers and DLF having their cost of debt actually reduced by over 2 percentage points in the last 2 years. And see, real estate companies also made serious attempts to cut their net debt. So a company like Macrotech Developer achieved this through an IPO and a QIP, and a company like Prestige Estate achieved this through sale of its assets to Blackstone. And this bodes very well for these companies because we are entering into a higher interest rate regime now. So it definitely helps. Now, the net debt to equity ratio also fell below 1 in FY22 because of this basic fall in the net debt. So, coupled with a more than 20% year on year revenue growth and the cut in finance costs, companies like Oberoi Realty and Macrotech Developers and DLF saw their net profits rise by over 35% year on year in FY22. Yes, got that right. So now let's move on to understand what can we expect from the real estate sector in FY23. So see, the consensus estimates from Trendline's forecaster see the revenue growth of the top real estate companies to be 20% higher than the FY22 levels, backed by better housing demand and new launches. So the top 5 companies are planning new launches of 48 million square feet in FY23, and they have over 95 million square feet of projects under construction already. So you have a player like DLF who's actually bullish to clock a double-digit pre-sales growth in FY23, backed by new launches. The company is actually bullish on its launch in luxury project launch in New Gurgaon. It is also launching projects in Chennai, Goa, and Chandigarh. A company like Prestige Estates has already launched 8 million square feet of project in Mumbai. It is also targeting new launches in Noida and Chennai in the coming part of the year. So you heard it right. So see, I'll tell. See, here's the thing. So while these launches do look good on paper, the extra supply which is being created has to be adequately absorbed by the local market, because we are entering into a higher interest rate regime. So see, here's the thing. Mostly Indians finance their homes through bank loans. Even a player like because this is because of the fact that they get it's a huge corpus, they get interest rate and principal deduction. Basically, they get tax benefits on their interest payments and principal payments. And see, a player like Macrotech developer also said that 75% of its homes in volume terms are funded by consumers through home loans. This number stood at 80% for Shobha. So now you can see clearly your rise in interest rate has a bearing on the housing demand as well. Yes, folks. Now, there are some property experts which believe that the impact of interest rate rise will be more on the affordable and mid-income housing project and less on the luxury segment. However, a player like Macrotech developer went on record and said that 60% of its home in the premium segment are also financed by bank loans. So there will be impact of rise in interest rate across segments, with luxury segment being a little less impacted. So, see, moving on, Fitch India believes that RBI's MPC might raise the interest rates to 6.15% by the end of 2023. And yesterday, US Federal Reserve also increased the federal funds rate by 75 basis points. And there's a high probability of RBI following suit. So definitely we are going to see an interest rate hike sooner than before. So the next 12 to 15 months are very crucial for the real estate sector and the building material sector. So this was my time, folks. Thank you so very much for watching this video and have a great day.